Ladies and gentlemen, welcome to a new episode in a new series. We're going to be doing a new thing here, hosted by your boy Bear Force One. We are going to be deep diving into specific sector stocks. We're going to be finding the niche plays that nobody else is looking for, and we're going to nail it. And we're going to present you the opportunity to make your own decisions, because this is not financial advice. This is entertainment. But we're going to present to you that entertainment could influence, give you some ideas, could make you go broke. We don't know, but we are going to find out. I promise you that right now on Deep Dive here at Kill the Market. Welcome. Sit down, relax, have a drink. Let's hang out. Let's get this done. I got a whole wealth of knowledge to present to you about this guy. Let's get into it. All right, guys. So today we're looking into something pretty unique. Neodymium. This is a mineral that MP Materials is all about. This is almost their entire workload is focusing on this thing. It's a highly reactive rare earth mineral. It serves as a foundational element in modern industrial manufacturing. When alloyed with iron and boron, it creates the strongest commercially available permanent magnets, driving the miniaturization of modern consumer electronics
and the efficiency of electric vehicle traction motors.
Whatever that means. My main interest in this thing is not all that. Well, there's some of that. Mostly it's the military application. Because the DOD doesn't play, and they always pay, you understand? That's it. How do you keep the money flowing? You work for the gov. Because if they ain't got the money, they'll just print it off. It's one of the most vital strategic resources in national defense. Estimating that roughly 78% of military weapons programs rely on components containing rare earth magnets. Because of its unique physical magnetic weight to strength ratios, it cannot be easily replaced without severely degrading performance. AKA, it's extremely important to advance technology in the proper direction without backstepping and redesigning existing systems that are already reliant on it. China owns upwards of 90% of global permanent magnet manufacturing, including neodymium. So this is why we're in this. Why would I want to get into something that China owns a majority stake in? Because the U.S. has got to step its game up. If we are going to continue to produce weapons to match the rising threat of China, we're going to have to, and not just China, everybody else, Iran, whatever. We got to keep it rolling. One of the coolest things about this is that the DOD has backed a static spot minimum of $110 per kilogram. What that means in layman's terms is no matter what the price goes to per kilogram of this rare earth mineral, the U.S. government is going to pay $110 baseline. If you apply that economics to the company's balance sheet and revenue, that means they can't go down if all of a sudden the market gets flooded by China, which they would do, of course, to try to undermine the company. What happens if the only company, the major company in the U.S., the biggest one, gets wiped out because profits cannot match? They're done. The only logical solution is to bring in the U.S. government to back it, right? Too big to fail. Too important to fail. This is the essence of why this business cannot go under. Not until there's a respective rival. I'm not seeing that right now. We got a couple little guys. We got there's some competition, but these guys, they're in there. Getting into a little bit of fundamentals after listening to the earnings call earlier was that the primary year-over-year metrics from the latest Q1 2026 print will show us the adjusted diluted EPS climbed to a positive 0.03 cents per share. Doesn't sound like much until you find out that it's a significant increase from the adjusted loss of negative 12 cents a share in Q1 2025. That is a massive increase from a negative to a positive. These things matter, okay? Especially when you're talking in tens of millions of shares, okay? I'm not a big look, I like all the little numbers and stuff, but this is fluff. This is little stuff. This is for the nerds out there. I'm just getting to the juicy stuff by cutting off the crust. You understand? Revenue rose 49% year over year to $90.6 million. Good. The company's valued at $8 billion. These guys are some big money going on. My buddy lives pretty close to their main office. Says it's very nice. It is. It's a nice place. Nice people. Great company. All right. Let's just get to the juicy stuff on why we're interested in this. So we know China, not the greatest friends of ours at the moment. Maybe historically, who knows? Definitely not for the last 20 years. That they have controlled up to 90% of refined rare earth magnets, allowing them to internationally flood the global market with a very cheap supply. Why does this matter? More supply is great, right? Yeah, except when China refuses to sell to the U.S. So if the U.S. cannot get these magnets for almost everything that they need, what happens when the global supply goes up, but the U.S. has none for itself? Well, this artificial oversupply will drag the neodymium spot price down to a brutal 50, 60 kilograms. It's dollars per kilogram. Sorry. Higher cost Western mines, they can't survive at that. Nobody's going to be able to afford the cost of production if people are only paying 50, 60 bucks per kilogram. They can't. They get paid that. It doesn't cover operational costs, especially not in the West where this stuff matters. So by forcing prices below the cost of Western production, the monopoly could systematically bankrupt U.S. competitors and destroy America's domestic military industrial base. That is the move! That's what they want to do. You understand? So why does this matter for us as traders? Well, this tells us that if we invest in this, if we take an active participation trophy in this thing, the U.S. government won't let it fail. Matter of fact, they have to keep it at a certain level to sustain its current operations since when this thing went into effect. Well, this thing went into effect in July 2025. So the overall market cap and everything, this is a big company to sustain. We got to make sure they keep going. They have to be able to provide. This is where we come in. Let's take a quick recap at this chart real quick. Now look, on a month, this is a monthly MP Materials. This looks ugly. I don't like this at all. I would never touch this. It doesn't even make sense. But here's what we're gonna do. This is a simplistic version, by the way. Okay, don't get all worked up. We see this big run up. This is when the military contract was announced for the spot price matching. Okay, PPA, price protection. This is what this was. Okay, so when this shot up, boom, it literally doubled, or I'm sorry, quadrupled 346% since, somewhere in this range. Cool. That was way back then. What does that matter to us now? Well, this built a new structure. This gap up. This was a day. All right, this thing let me tell you something. When that was announced, this launched up. Oh my God. This thing launched up from where it was. When it was announced, this launched up 50%. 50%. Overnight gap up. Huge. Look at the volume. Look at the volume that came in on this thing. Look at this. There is nowhere else in the history of the company that has this kind of volume. This tells us a new floor has been established. This is what we're watching. Could we be wrong? Yeah, haven't been wrong before. Psst. Way too much. But not much lately. A couple times here and there. Okay? Get off my back. Uncle Tor, are you watching this? Eat a dick. Okay? Look. This structure, although it looks, what does that mean? I look at this, bro. I go, man, we're going to short this if it breaks structure and retests. I look at this and go, wait a minute. Wait a minute. A little consolidation here. Look at the volume that came in right here. Rejection. Boom. 45 bucks at Buckaroos. Another rejection. Another push down here. They're fighting right here. This, my friends, I believe this could be the acclimation phase. This could be the move up. Another thing important. Earnings. Next earning report, 19 days. August 7th. This is a big deal. We could really be seeing something special come here. I'm excited to see what happens with that. Now, we're not going to play the earnings like that. Okay, we're not going to buy on August 6th. We're going to play the run-up. We're going to play the hype. We're going to try to get ahead of the curve here. We're going to take our little corner. We're going to be happy with our little piece, the little nibble that we can get. We're not looking for a 200%. This company might shoot up to whatever, infinity and beyond, but we're here for a trade. We're looking for a little bust. A little something, something. You know what I'm saying? We'll see about the consolidation next week. Right now, we are not even in this thing. But we're watching it, okay? The government, this is backed. This is interesting. We're going to see what happens. They can't let it fall too low. There's awesome potential here. In June 2022, China's Ministry of Commerce officially added MP Materials, the company, to its export-controlled blacklist. They will not be receiving anything else from China. The government's got to step in again. They can't let this fail. They have to have it to produce the arsenals and the weapons that they need. One thing about the human race you can always bet on, and I do, it's affinity for war. It's necessity to do these things. We don't condone it. Nobody likes it, right? We've all lost somebody to something terrible like that. But if we're not betting money based upon our traumatic experiences, we are betting money on a consistent pattern. And I've already explained that to you. Human race's consistent pattern. It's in our nature to destroy ourselves. Boom! T2 reference. Let's keep going here. The put-call ratios. This is where it gets a little interesting, a little dicey. The total volume put-call ratio is hovering around a neutral to slightly bullish 0.67. And for every 67 puts, there's 100 calls. Okay. While retail traders are stepping up to buy protection under the 52-week lows, this 52-week lows, okay? That's right now. It's happening now. While that's happening, the majority of calls clustered into the 50-55 strikes and puts down to the 40s. This, where we are, is directly in the center. This could be a good entry for that. The max pain is 54. Expected move is going to be 7%. Doesn't sound like much. But with a little bit of leverage and a covered call, could be looking at a decent amount of money. 7% might not sound like a whole lot, guys. But when you're doing trades and not investing, you're doing something quick, 7% compounds fast. 7% per trade at 20% of your portfolio is going to add up greater than the yearly average of the ETFs compounding, okay? This is how you do it, how I think you should do it. It's possible. Highly logical. Takes a little bit of patience. Paytines. CAPI. You know what I mean. Okay. All right. So look. Let's continue here. Over the next week or two, we slowly start adding positions. We start seeing it run with high volume, pile in a bit more. We start seeing it draw down, sit on your hands. When you see the curl, when you see the volume start shifting in the direction, then you throw in. You want to have confirmation from the volume and the candles. We want to see closes over 45, all right? We want to see this line sustained. It very well could go for the gap fill here. If it does that, the trade is invalidated until we can re-enter here at $39. If you want to hold that long, you can. Dollar cost average all the way in. You might be able to catch the move. Earnings is on the 7th. Beware. Be aware. Be mindful. You want to be careful for that, okay? So let's recap real quick. We got a mineral company here. Earnings is coming up. They are being artificially suppressed by China, but backed by the U.S. government. They have to be able to flourish for the sake of national defense. And if there's one thing, literally one thing the U.S. government doesn't play with, it's defense. Okay? It's so obvious the potential here. Not guarantee, but the potential here. So what are we going to do? We're going to average in. We're going to wait. We're going to follow the contracts. We're going to see what we can do. Check the websites. We're going to follow the information. We start feeling a little dicey. You start seeing a bad runoff. You got to get out. You take your hits. It's part of the game. You start seeing it run up. You add in. Where's our target? 55. That's what I'm aiming for. 55. Puts us right about there. Right in the middle of the mix. 24%. Earnings pops off. If you're still holding, you might get it all the way up. It might have another spot. Might break this downtrend here. It's descending triangle pattern. That's what it looks like to me. Maybe not. Either way, be safe. Keep it real. We'll check in with you next week. Bear Force 1 out.